now, right 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 now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your weekly daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the massive all-time high breakout that occurred about this time yesterday. As you will likely already know, Bitcoin has rallied up to a new all-time high of $111,900. Why then, Jeb, have we not yet just teleported straight to 120K? Why does it seem that we've still got a lot of resistance here at this $111,000 to $112,000 price point? Today, we're going to be discussing why Bitcoin has not gone absolutely parabolic just yet, and we're going to be talking about, even more importantly, the decision on whether or not we should be acquiring more Bitcoin right now at these levels. This is a big internal debate I've had with myself. This is a big debate that's going on Twitter. Should we be acquiring here or should we not? As always, I am not going to be your financial advisor and tell you what you should do, but I am going to walk you through both trains of thought so that you can better understand which direction you ought to go and make a decision that is right for you, your portfolio, and your family. We've got a lot to talk about today, so we're going to go ahead and dive right on into it by reading some chat. Thank you all for being here this morning. Good morning to Abraham Lee, Daniel J, Blasnik, Philippe Dakahuna, Joe Bollier, Danny, Roderick Dobson, Chris, and Thomas Lean said, life is good. Indeed, indeed it is. God is good all the time, and all the time God is good. What movie is that from? Guys, we got a lot to cover. Let's jump on to the charts. Bitcoin is currently trading at $110,900. A much higher level than where Bitcoin was yesterday. When we started the stream yesterday, Bitcoin had just a couple of minutes before broken above $109,326, our previous all-time high. And we ended up going through a major correction on air yesterday, down to about $106,000. We ended up going into a major correction that would bottom out around $106,900. Now, this was a very interesting movement because many people thought that this was the end of the rally. They thought that we had double topped. They thought, oh no, this is a repeat of 2021. Bitcoin hit $65,000, then it hit $69,000 at double top. There's a lot of fear going on with that right now, which we're going to talk about as the stream goes on. I want to tell a couple of stories first and foremost. The first story plays out on the Bitcoin chart itself. If we come down to the hourly chart, you're going to see that Bitcoin painted a beautiful, absolutely beautiful cup and handle formation right here. It was not perfect, but it was a beauty in the sense that it played out, right? It's very difficult to draw where the neckline is here because this cup and handle formation was not exactly perfect, but the best place, in my opinion, to draw the neckline, or actually in this case, it'd be called the rim line of the cup and handle formation, would be right here. As per usual, we will draw our cup and handle formation extrapolation just as so, from the bottom of the cup to the top of the rim, and we extrapolate, and you can see that that was our exact price target. For all of you students of the Cryptocurrency Technical Analysis Academy, this is something that will not surprise you because we've been teaching on the cup and handle formation for the better part of the last decade. If you've not already signed up for the Cryptocurrency Technical Analysis Academy, you can get it for $147 a year right now and join the best technical analysis school anywhere online, specifically geared towards cryptocurrency. Check it out with the link in the description box down below. Join our over 5,000 students learning how to make calls like this. TA nailed it this time. Here's the good news. Ever since we broke above the previous all-time high, we have not fallen back beneath said all-time high. The prior all-time high on Bitcoin was $109,326. We have smashed it. Since we broke it, we came and back tested it twice, and we've stayed north of it the entire time. Now, there's a couple of things that we need to talk about in a specific order, and the first one is going to be market cap. Yesterday, Bitcoin's market capitalization passed that of Amazon. hitting $2.23 trillion. Bitcoin's market capitalization now makes it the 5th largest asset in the world after Nvidia, Microsoft, Apple, and gold. Microsoft is currently the highest valued corporation in the world, and their valuation is approximately $3.3 trillion. That's right, $3.3 trillion is the valuation of Microsoft. Bitcoin is on its way there. Let me see if I can find that. My fast typing skills are coming in handy right now. Let me show you this chart. You've probably seen it floating around. Here we go. CoinDesk has it. Even CoinDesk made an article on it. We've got this chart right here. So you've probably seen this floating around. Yesterday, we passed Amazon's valuation when we hit about $108,000 in price. Apple is next on the chopping block at $3 trillion. That would be roughly a $150,000 Bitcoin. Microsoft is the largest equity in the world at $3.4 trillion. If Bitcoin were to pass Microsoft, we would be looking at a $175,000 Bitcoin, and that is most likely going to happen this cycle. We kind of discussed that in yesterday's video. Now, once again, why then, if $175,000 seems kind of priced in, why hasn't that happened? I think we've got our expectations a little bit wrong, friends, here in the cryptocurrency space. I think we're getting a little bit greedy, might I say. The fear and greed right now, if we can find it over here on CoinMarketCap, is very high, as it should be. Bitcoin has gone through a massive rally. We're at 73. People are extremely greedy. And the issue with the extreme greed is that people do not appreciate what we have. Bitcoin having the fear and greed at 73 means that people are not appreciating the fact, because they're only looking to the future, not looking to the past, they're not appreciating the fact that Bitcoin has already rallied 50% in the last 47 days. Why does that matter? The reason that matters is because even though the fundamentals are up and to the right, even though the fundamentals are exceptional, we have to realize the technical reality. I want to break down both sides of this. I want to break down the fundamental side. I want to break down the technical side. Fundamentally speaking, I will try and keep this brief because I could ramble about it for the next 3 hours. Fundamentally speaking, the bond market is in the middle of imploding. Now, that might take another 12 months. That might take another 12 years. The reason that the bond market matters is because the bond market is how countries finance deficit spending. If you haven't noticed, Congress likes to spend money. A lot of it. And right now, we've got the big, beautiful bill from Donald Trump going through, which is going to lower taxes and, to some degree, increase expenditure. I'm not necessarily against the bill, except from a budgetary standpoint, the debt's going to grow. And so, no matter who's in office, Republican, Democrat, deficit spending grows. In fact, I just reposted this on my Twitter yesterday. Follow me at CryptoJeb on YouTube, on Twitter. Just reposted this. George Herbert Walker Bush term begins, 88, debt increases. Clinton, debt increases. George W. Bush Jr., not technically Jr., but George W. Bush increases. Obama increases. Trump increases. Biden increases. It doesn't matter who's in office. The debt goes up a lot. And so the issue that we're running into here is that the United States Federal Reserve and the United States Treasury have to finance that deficit spending somehow. Either the Fed prints the money out of thin air, which is inflationary because it increases the M2 money supply, which devalues every dollar you hold. That's like, okay, there used to be 10 chairs and you held one of them. So you held 1/10 of all the chairs in the room. Well, now the Fed comes in and drops in 5 new chairs that it just poofed into existence. Now your one chair is a smaller portion of the sum total of the whole, and so it has less value because now to have 1/10 of all the chairs, you'd have to have a chair and a half, right? So if you put 33% of the, if you increase the supply by 33%, you have to increase your net worth by 50% just to keep up. See? 5 chairs on 10, it's a 33% increase. Well, it's a 50% increase, right? You have to increase your net worth by 50% to do that. And so that's what we're having happen right now, is that the Fed is looking like they're going to probably have to go back into QE in the next 2 years. The other way that governments can finance deficit spending is through bonds. And a bond is literally, virtually no different than you saying, I bring in $6,000 a month, I'm spending $8,000 a month, so I'm just going to put the extra $2,000 a month on a credit card. Except governments are special, so they get to only pay 5% a year instead of 27% a year like you would on a credit card. The issue is eventually the interest payment grows to such a degree that it is impossible for you to ever get out of debt, and the only option is to massively increase income, slash expenses, and slash and burn, step 3 of the financial sovereignty way, to get out of debt, or you have to file bankruptcy. The United States government is going to get to a point where they're going to have to file bankruptcy at this rate. I mean, it's just going to happen. And so why does this matter? Well, the bond market is showing signs of weakness. Yesterday, this was freaky. Yesterday, there was an auction for 20-year U.S. Treasuries. The 20-year rate was, let's see if we can find the 20-year. The 20-year rate was 4.6, 4.7. It was approaching 5. And then yesterday, you can see it right here. In fact, I can probably find it on TradingView. That'd probably be better. Let me find it on TradingView. See if I can find the 20-year Treasury. 20-year, where is it? United States 2-year, 20-year government bonds. Here we go. Okay, so here's the chart. Yesterday, the United States had an auction for Treasuries. Basically, no one showed up. We saw an immediate, this was around 1 p.m. yesterday, we saw an immediate spike of 12 basis points. Over the course of 2 hours, we saw a 15 basis point spike. This is driven by people not trusting the United States federal government anymore. If you look at the full chart, which that sucks, TradingView doesn't go all the way back, but this chart is very, very high if you track it back into the past. The last time we saw U.S. Treasury 20-year government bonds at 5% was right before the 2008 housing crisis. It's the highest it's been in 15 years. In other words, as this number goes up, it means that people are becoming less and less confident in the United States dollar. You also see this playing out in the Dixie. The Dixie has been crashing pretty much ever since the inauguration, down 10%. The United States dollar has lost 10% of its value against other world currencies. That's what the Dixie's tracking. So as people are seeing increased deficit spending, weakening on the dollar, that is leading to them demanding a higher rate on long-term bonds because they don't trust that the United States dollar is going to stay solvent for 20 years, or they don't trust that it's not going to go through an exorbitant amount of inflation for the next 20 years. The people buying bonds expect at least 3% per year inflation minimum because they're demanding 5% to buy the 20-year bond. Again, what's the bond? The bond is a financial tool that the United States government and other governments sell to raise debt to finance deficit spending. Once again, it's like you go to Chase, you say, I'm broke. Can I take out a credit card? Cool beans. You take out a credit card, you finance your deficit spending for 12 months, then you run out of credit limit, so you ask for a credit limit increase. I've watched this happen over and over again. It's destroyed people's lives financially, and they're left with one choice, which is bankruptcy. Somewhere along the way, they're left with the choice of cutting expenditure, working 3 jobs, paying it off, debt snowballing it, but eventually it gets to a point where you have no choice but bankruptcy because it becomes mathematically unworkable. And that's the direction the United States dollar is going. This is the fundamental argument for Bitcoin. Bond rates are increasing, Dixie is dropping, and it's leading to a massive influx into gold and into Bitcoin. There's been a massive run into gold over the last 2 years, and that is not a coincidence. The reason that gold is up 63% in 2 years is because people are not trusting the US dollar the way that they used to. So the fundamental argument is that $110,000 is a massive discount on Bitcoin. Remember, we're comparing the fundamental and the technical argument because I kind of disagree here. The fundamental argument is that $110,000 is a gigantic discount on Bitcoin because hyperinflation drives hyperbitcoinization. It's a phrase you ought to remember so that you can teach it to people. This is the core, this is the thesis of my entire argument here. Hyperinflation drives hyperbitcoinization. And it's coming. It's coming quickly. If you need any more proof, then there are only 2 things you need to look at. You need to look at the security of the Bitcoin network, and you need to look at the surety of the inflation. It is a sure fact that inflation has occurred over the last 5 years. If you look at the US CPI, I believe that's the chart. Yes. If you look at the US CPI, even official numbers, even official data, which is extremely untrustworthy in my opinion, since January 1 of 2021 has increased by 25%. According to official data, we have seen in the last 4 years 25% inflation. That is an average of 6.5% per year. That's official data. But you know darn well that groceries are much more expensive than 25% higher than what they were in 2021. You know that thing that you used to buy for $2.99 is now $5.49. You know, like for me, here's my thing. You know where I got a little bit of a belly? I'll tell you where. I live in the South. We have a thing called Publix down here. Who knows what Publix is? You know, the place where you go in, get your daily meal, step on the scale, and then you go back out and you have to swim through the parking lot to get to your car because it's so freaking hot down here. Yeah, it's like devil's butt crack down here. It's so hot, right? Here's what Publix taught me. I used to get a Publix meal, 3 tender meal. Thing was $5.49. That was in 2020 and 2021. It's got way too many calories, but it tastes good. You know, got to indulge yourself every once in a while. Used to be $5.49. Now it's $8.99. That's not 25%. It's like 75%. And everything else in the store is like that too. Now, yeah, Publix is expensive. I know. Aldi, Walmart. You want to talk about gasoline. You want to talk about car insurance. You want to talk about home insurance. You want to talk about health insurance. You want to talk about whatever you want. Inflation is much higher than is reported, and it's reported at 25%. Okay, so hyperinflation is occurring. No question. That's the first argument. If the thesis, fundamentally speaking, is that hyperinflation drives hyperbitcoinization, if that's the thesis that I have to prove, it rests on 2 premises. One, that hyperinflation is actually occurring, or that it's actually going to occur. We have to prove that thesis. Then we also have to prove that Bitcoin is a safe, stable store of value. Is inflation occurring? Is hyperinflation coming? Yes. I believe that you could prove that. I believe that it is proven historically. I believe that it is easy to prove in the future because of what we see on the horizon. Government deficit spending does not appear to be slowing down at all. Why should it? By the time these old geezers are out of office or they croak, that's when the issue happens. That's when the issue comes. They're not in office, so it's not their fault. Somebody that gets elected in 20 years, they step into office, they've been there for 6 months, and oh, now it's their fault, even though the problem has been brewing for a century. Right? Okay, so that's the first thesis. Is inflation occurring at a high rate? Yes. Is hyperinflation coming? Yes. We know that. Can we trust Bitcoin? Well, let's see. Bitcoin is the largest unhackable network in the history of mankind. You name me another network that has not been hacked in 16 years, not one time, not one shred, not anything in 16 years, and is worth more than every single company on planet Earth bar 3. You name it. You tell me a more secure network on planet Earth. Not just, oh, well, we've got this new protocol, you know, it's going to do the thing. I'm not talking theory. I'm talking proven. I'm talking we've got results that we can point to. It's not, oh, well, it's going to do so great in the future. You don't know the future. Point to another network that has the same trial by fire that Bitcoin has had. It's done $100 trillion plus in volume. The amount of transactions that have occurred on the Bitcoin network are astronomical. It is the most successful form of currency in the history of mankind not run by a central government. Period. There isn't another one. So safety, that's absolutely right. It's very safe. It's very secure. We have a proven track record for that. And every year the network gets larger and more secured as more miners come online. Cool. So if we can prove that hyperinflation is happening and is going to happen, which is very easy to do. I mean, you'd have to be a fool not to see it, right? That's basically an accepted truth for everyone in economics. And you can prove that Bitcoin is safe. Then the last thing you have to prove is the connection between the two of them. If hyperinflation is coming, then that means people are no longer going to value bonds. They're no longer going to trust in bonds because when you buy a bond, you're basically buying a fiat currency with a return. You're basically you might as well be buying the dollar plus a yield. That's more or less what you're doing. You're loaning the government money so that they can have cash. You're playing the role of the banker, and the United States federal government is the customer. Isn't that backwards? Like, shouldn't that not be the way it is? Isn't that I don't want anybody borrowing money from anybody, but wouldn't it make a little bit more like logical sense for the people to be borrowing from the government? Doesn't that make a little bit more sense? I don't like it, but doesn't that make more sense than the government has to borrow from the people? Have we gotten so blind to this that we just accept the reality that the government's so broke that they go to your grandma and borrow money from her to fund her retirement? How did we accept this as real? How is the fact that the government has to borrow money every year to finance their spending something that we voted for? Because we have no one to blame but ourselves. We put these idiots in office. Come on. Okay, so again, the connection. Is hyperinflation happening? Yes. Is hyperbitcoinization, is Bitcoin a stable, good asset for safety? Okay, look at the last 16 years. Has it ever been hacked? No. Has it always gone up? Yes. Has anybody that's ever held Bitcoin for longer than 6 years made money? Every single last one of them has. Cool. Can we reasonably expect that to continue into the future? Well, nothing's changed so far, so why would it in the future? what we see happening is people are getting tired of dollars because of the hyperinflation. So where do they go? At some point, the scales tip. Bitcoin's down here, dollars are up here. Bitcoin's considered, it's kind of safe, whatever, it's risk on. Bonds are up here, they're the risk-free. For the last century, people have considered U.S. Treasuries risk-free. What a stupid thing to say. Nothing's risk-free. Pride cometh before the fall. And the fall will be great thereof. There's $300 trillion in bonds globally. There's like 25 or $30 trillion of them just in the United States government alone. 10% of them the United States government holds. As the confidence in bonds goes down, you're going to see an exodus of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10% of bonds at least, and they got to go somewhere. There's only really 3 places that they can go. One, they can go into real estate because people consider real estate to be a scarce asset. The issue is all you got to do is drive 10 miles down the interstate, an extra 10-minute drive, and you got 1,000 acres of woods right there that you can put your Walmart on. Yes, land is scarce, but it's nowhere near as scarce as gold and Bitcoin. Okay, so what about gold? Well, the issue with gold is its supply increases by 2 to 3% per year, so are you really getting away from 2 to 3% inflation? Not really. Also, people don't like gold as much. More Americans own Bitcoin than gold by over 20 million. There are 60% more Americans that own Bitcoin than gold. There's 37 million Americans that own gold, roughly. There's about 56 million Americans that own Bitcoin. 60-something% more people own Bitcoin in America than gold. Okay, so if real estate's kind of an option and gold's kind of an option, but they're not great, they have their drawbacks, then what's left? What, are they going to store it in cash? That's the thing that they're betting against in the bond market. Where are they going to store their money? What was one answer? Bitcoin. Bitcoin was created for a time such as this. As people flee bonds, as people get orange pilled, they put their money into Bitcoin for the Bitcoin to be the safe haven. They start to realize that Bitcoin is not an investment. It is a savings account. The only reason it's an investment right now is because it's in the middle of hyperbitcoinization. Hyperinflation and hyperbitcoinization have already started. This is not a hypothetical, theoretical, future reality. This is a current reality. We are seeing an exodus away from fiat-backed assets like bonds to hard, finite assets like gold and dollars. The fact that gold has increased by 45% in the last 2 years ought to tell you something. The world after COVID, when they saw the tyranny of shutting everything down, when they saw the inflation of what happened, when they saw $5 trillion added to the United States balance sheet, they realized, whoa, this financial system has some serious cracks in it. And you fast forward this game 20 years, and if this ever happens again, it is the end of fiat currency as you know it. People will start to view Bitcoin not as an investment, but as a savings. Right now, it acts as an investment, and it beats all other investments because it's in hyper-Bitcoinization. That lasts the next 20 years. And then it probably will level out, and it'll grow at the rate of the global economy because it takes up a percentage of the global economy. Eventually, Bitcoin will grow 2 to 5% a year, along with 2 to 5% a year GDP growth around the world. And any country that does not adopt Bitcoin will go bankrupt if they continue their current monetary policy, with notable exceptions like maybe the Swiss. You know, the Swiss have a very low debt to GDP ratio. They make a lot of money. They don't spend too much. They don't have a giant deficit. They could do without Bitcoin. They don't have to have it. United States, got to have it. No choice. Japan, got to have it. No choice. You collapse as a modern society if your currency collapses. If you go through currency collapse, you have bread lines a mile long. What was that song we heard on that show last night? 100 people in the bread line today. 100 people in the bread line. One person got a loaf of bread. That's all the bread we had this year. It's the story of communism, guys. It's the same thing is going to happen because of insane government expenditure. That's the financial argument. The fundamental argument that's saying we're going to $1 million a coin. But again, we're comparing the fundamental argument, which is bananas, to the technical argument. And the concerning thing about the technical argument is that the technical argument, while the fundamental argument calls for like $250,000 Bitcoin this year, the technical argument calls for a drop any day now. Right? We have not really seen a correction since we bottomed out at 74.5. We've gone into these like trading channels. We've not seen an actual correction. Even in the last rally, we saw these drops, right? We saw a drop here. Now we're on technicals. We saw a drop of 10%. We saw a drop of 8%. We haven't really seen that. We've seen this right here. I mean, this was a 4% drop, but we haven't really seen a drop. It's basically been purely up and to the right. We've also seen a 50% rally occur here. 45 to 50% rally occur very quickly. And when you look at this, we have not just broken $109,000 and gone absolutely parabolic. We've not just absolutely moonshot yet, which indicates there is more resistance at 109 to 111 than people thought. And the reason for that is very simple. People just made 50% and they're taking profits. They're thinking they're going to be able to buy back in lower. They're taking profits on some of their alt positions that are starting to rally some. And people are taking profits on their Bitcoin position. The other consideration is that when you factor in the inflation of the United States dollar, even though we're at a new all-time high, we're really at an equivalent all-time high. And so the concern here becomes a rejection in this zone, which would look something like what we saw here in 2021 and 2022. Is that going to happen? I don't think so. I think Bitcoin's going to be just fine and we're going to continue rallying up to 120 to 125. But the fact remains that the short-term technicals are not as hot as we would want them to be when we're breaking through the catchment zone of a new all-time high. Now, here's the good news. Let's say Bitcoin did reject here. There is so much bullishness in play that it's unlikely that we would drop below $100,000. $100,000, sub $100,000 is probably gone forever. You will probably never be able to buy Bitcoin for less than $100,000 per coin. It's probably gone. Maybe not, but it's probably gone. The amount of buy orders that would be sitting there are enormous. I would have buy orders at $100,000 ready to go if I thought we were going in that direction. So a drop down to $100,000 might happen now that we hit 110. If that happens, though, guess what? What's that? You've seen that before. It's a head and shoulders pattern, right? With inflation, slightly uptrending, whatever. If that head and shoulders pattern does occur, we drop down to 110. If we drop down to 110, guys, that's a relatively healthy 11.5% correction. That's great. Love it. It's good for the market. The breakout would be pointing at $150,000. So, what does this mean? The fundamental argument is more or less screaming $250,000 this year or within 12 months from now at least, maybe summer next year. The technical argument says we're overdue for a correction. You can even see it on the RSI. The RSI is creeping up here, guys. Relative strength index on the daily chart is creeping up to 77. That does not mean the top is in, but it does mean the top might be close. It does mean a correction needs to happen sometime soon. See, my plan is to buy Bitcoin in this section, stack cash in this section. Capiche? So that I can buy Bitcoin in this section and then stack cash in this section. That's what I do. For this whole time, I was stacking a lot of cash up here. We bought some Bitcoin too. We have our certain dollar cost average every day. It's a large number. We dollar cost average more a month than most people make. We dollar cost average into Bitcoin every day. But then we also bought the dip. As Bitcoin started going down here to 80, 85, 75, we started buying. Around 82, I started buying right around here. And then we bought all the way up here with all the cash that we stored up here. My goal now, as we move into this north of 109 territory, is to start acquiring cash, and I'm acquiring Bitcoin, but a little bit less aggressively because I want to store up cash for the next drop. If Bitcoin does rally up here to 140, then a drop down to 109 to 110, 115 is probable, which means we may see these levels again with a new massive all-time high to give us confidence that we're going to break that new all-time high. Friends, if Bitcoin only goes to 150, that's a very good thing. If Bitcoin only goes to 150, hallelujah. I hope it does. I hope we get 3 or 4 more cycles like this because I love playing them. I don't want Bitcoin to go parabolic and go straight to 250 in the next 2 months. Shoot its shot and then we're done. I don't want that because then we got to deal with a bear market. I don't want a bear market. Screw bear markets. Who the hell wants a bear market? I don't want Bitcoin to go down 75% for 2.5 years. I want to see it drop 20 to 40% and me buy at the dip. So what does the technical argument say? Because the fundamental argument says moonshot. Moonshot. The technical argument says Bitcoin is getting a little bit overextended, and in general, our corrections so far this cycle have not really been that deep. It's been a very forgiving bull market. 20%, 28%. The recent correction is 30%. It's not the 40% that we've seen in previous bear markets. So here's my dilemma. The technicals say that we're getting overextended for a correction. The fundamentals say we're getting that we're gearing up for a double, for $1 trillion at least to come into Bitcoin. At this point in time, it seems to me that a drop is going to be happening on Bitcoin at some point in the month of June, maybe even in the month of May. We've got to have one eventually, because the fundamentals in the long term are extremely strong, but the retail sentiment is dead. The retail's not here. So for the first time in this entire rally, my drop radar is starting to kind of ping. It's starting to say, I feel like a drop might be around here somewhere. I'm starting to sniff out a drop. I don't know exactly where yet. It is highly possible that it could be right here, because I mean, this is strictly speaking an uptrend that Bitcoin just hit. We found new resistance, right? We found new resistance right here. This is our uptrend, right? It could be right here. If we don't break through this level of resistance, then yeah, it could be right here. And if we do, it'd be a drop down to $100,000 most likely, which would be a lovely entry. Would love to see that. And it would also be very healthy because it would print the inverse head and shoulders pattern. Moving on into July and August, you go up towards $140,000. I would personally love that. That would be phenomenal if that happened. I would love to buy more down there near 100K. So your basic two options here are thus. One, the fundamental argument. We're about to smash through $113,000 and break straight towards $135,000 to $140,000. The technical argument says the healthier move and the more likely move would lead us to believe that a correction of 5 to 10% is coming to establish the inverse head and shoulders pattern, and because the resistance around $112,000 is so strong. That is what I think is probably going to end up happening. At some point, a correction in the next 2 weeks is probably going to happen. It might not be massive, but it's probably going to happen. And so prepare accordingly and have some cash to buy the dip. Never use all of your cash. Never use all of your cash. Always have some cash on hand that you can use to buy the dip. Now, here's the other thing that I want to talk about, Lux Algo. If you guys have not already signed up for Lux Algo, you absolutely should. It's incredible. It has called this entire rally. We've been under a confirmed buy signal on Lux Algo since $85,000. If you were listening to Lux Algo, you started buying at 85 and you made 30%. You're welcome. Oh my gosh, Jim, I don't want to spend money on Lux Algo. It's $39.99 a month. It's $300 with the coupons, like $300 a year. One trade. If you put $1,000 into Bitcoin on one trade, most of you guys got that. You already made that in a month. Like Lux Algo, if you actually use it, generally speaking, is probably an even better return than what you're going to get in Bitcoin, because it'll tell you when to buy Bitcoin, when to stack cash, when to go into your trades. If you've not already signed up for Lux Algo, do so. Links in the description box down below. Lux Algo nailed this one. But as you can see, we had a Lux Algo buy signal here, and Lux Algo, we saw a rally for a while, but eventually it gets too hot, right? The market ends up getting too hot. If we look at the smart trail and the reversal zones, and we're also going to see that we are starting to inch up here into the reversal zone on Lux Algo. You can see that forming right here. The last couple of times that we've hit that reversal zone, we've had a small rejection. We've also got this uptrending level of resistance, right? We saw the same thing happen here. We rejected for a little while. Here, we just punched straight through, but we also had the election of President Donald Trump that day. So that's where, unless we have some massive bullish news to just moonshot us, then a correction is possible. I don't want to bet on the bearish side. We are still acquiring. We acquire at a certain rate, so we don't dump everything all at once. We never dump all of our cash in at once. We always spread it out over 10, 20, 30, 40 entries, like daily or every other daily entries on top of our daily dollar cost average. But the point here, guys, is that you need to stack sats. The point here, guys, is that we've gone through a major rally. The farther we go in this rally, the more likely a correction becomes. I'm not saying the correction is going to happen today. I'm not saying the Bitcoin can't go back above go up to 112 and above. I'm not saying that it's going to happen before 120. It might not. But a correction is going to happen at some point, and we're getting into that part of the cycle where I get really unpopular because I do this every time. I say a correction is going to come at some point. I said that back down here when we were right below 100K. I'm like, a correction is going to happen sometime. I don't know when, but it's coming. And it happened a couple months later, right? So a lot of times I call it a little bit too early, so maybe I'm calling it a little bit too early. But what I want you to understand is that we're moving into the phase here where you want to slow down on your entry because you should have already done it. You should have already been with a lot of conviction, entered hard. We dumped a lot of money in these three areas. We dumped a lot of money in these three areas, and every single one of those entries is in profit. Made an entry last night before we went to bed, okay? I'm putting my money where our mouth is. Okay, so but a correction is coming at some point in the future. Again, I have a tendency to call it a little bit early, so maybe it's a month or two from now, but it also could be in the next 2 weeks. So just stay tuned because you might see lower levels than 111 again. You might get a better return than 111. I say that tentatively because Bitcoin 2025 is next week. I'm going to be there. CryptoJeb's going to be in at the Venetian for Bitcoin 2025. I'm going to be attending all of the major talks. We'll see what's stated. Peter Schiff is going to be there. Show of hands, what do you guys think Peter Schiff is going to say at Bitcoin 2025? That's very interesting. Mr. Schiff himself is going to be there. Is he going to go there and admit he was wrong? That'd be nice. Open Schiff Bitcoin. We could convert him. That'd be good. You get a lot of gold bugs in Bitcoin that way. Who knows? Maybe he'll just get up there and trash it and people throw tomatoes at him. Who knows? But Saylor's going to be there. I think Bukele's going to be there. JD Vance is going to be there. I'm very interested to see anything that JD Vance says at Bitcoin 2025 because there is a possibility that he'll be making an announcement about gold being converted into Bitcoin. Remember I said that because there is a greater than nothing possibility that there's going to be an announcement from JD Vance about U.S. policy as it relates to Bitcoin. That is very, 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 very possible. It's a big conference. So if something like that happens, then forget a correction. Bitcoin's teleporting to 130. Forget 120, 130. If we see an actual confirmation that gold is going to be sold for Bitcoin, that would be a death nail in the coffin. Recent studies have shown over 80% of Americans support the United States liquidating some of its $600 billion gold reserve to buy Bitcoin. So that is, I would, if I was a betting man, I'd bet a small amount of money on JD Vance announcing that personally at Bitcoin 2025. And within minutes of him announcing that, Bitcoin goes really, really, really high. Really high. So technicals, fundamentals, kind of disagree here. I'm a technical analyst. I like to side with the technicals. They're generally right. But we also don't know what's going to happen at the conference. We don't know what's going to happen with breaking this uptrend. So right now, we're kind of in a holding pattern. Continue what you're doing. My strategy, our strategy, is we dollar cost average the same amount every day, no matter what happens. That's our baseline to stack sats. And then I also try and play the timing game with our cash. I do my best to time to buy closer to the bottom and stack cash when we're closer to the top. And that comes down a lot to Lux Algo and more or less RSI. As RSI gets higher here, we transition out of lump sum investment into stacking cash. As MACD gets higher here, by the way, we just had another golden cross. Really good news. You know, we could go. This rally is not over. I don't think the rally's over. We're not going into a big correction, just a mid-rally correction. We're not looking at 40%. We're looking at 10, 15% max. As we get closer to the reversal zone on Lux Algo, that's when we start stacking more cash. So right now we're moving more into cash, moving a little bit out of lump sum investment so that on the next dip we could buy more. Okay, so let's read some chat. I really appreciate all of you guys for being here today. About 37 minutes in, so we're going to continue. Shout out to, let's see, where is she? Shout out to Kimberly McConnell. Shout out to Mrs. McConnell, who's here in chat. Good to see you, ma'am. Mrs. McConnell was a teacher of mine in high school who has been orange-pilled. And so shout out to her. Good job, Mrs. McConnell. Please don't tell any embarrassing stories about how stupid my hair looked in high school. No, I don't care. Jeb, doesn't Bitcoin usually drop after the conference anyway? It can, largely because all the announcements that were going to be made have been made, or if no announcements were made, then no announcements were made. Have you spoken about the U.S. bond sale yesterday? I did. It was a travesty. It was very sad. We saw 20-year bonds being offered. Basically, no one showed up. If the United States cannot raise money through bonds, then the only way they can raise money is through debt, is through quantitative easing. And at that point in time, they are what we would call in the business screwed. And by them, I mean the United States dollar and the people that run it. So, yeah. Quinn Daughtery said, "Hi, Jeb. So happy to catch the live and see you giving top-tier analysis. Where are you taking Bitcoin profits, if any? Much love, brother." I am 95% likelihood I'm never going to take profits on Bitcoin. We have a no-sell policy until 2040. That's what we've decided, is we're not selling Bitcoin again until 2040. That's what I'm going to do my very best to do, unless there is an absolute serious reason why I have to. I don't really want to time the market with my sells. I want to time the market with my buys. In my opinion, that is a better goal, because if you start trying to time the market with your sells, then you lose sats. If you time the market with your buys, then you get a better or a worse deal on the sats that you acquire. I don't like going down in Satoshis because that is going against the direction that I want to go. I want to get to certain targets on how much Bitcoin we have. And you should have those targets too. You should maybe have a target of 0.1, 0.25, 0.5, 0.75, 1 Bitcoin. For us, our targets are higher, but it's the same thing. We have targets of how many Satoshis we want to acquire, and selling them is a little bit counterproductive because I can sell them and possibly buy back lower, or the next day, the United States government could buy 100,000 Bitcoin from some over-the-counter market and I just missed out on a 2x. I'm not really in that game. I know a lot of people do that, and I honestly do think we're going to have a pretty easy time calling the top of the bear market this time. The top of the bear market is where I will be selling our entire altcoin bag, or the vast majority of it. The vast majority of our altcoin bag I will be selling at the top of this market. It'll be pretty easy to tell that the bull market top is in. You're going to see a massive influx of Bitcoin onto exchanges. You're going to see Bitcoin dominance crashing as the altcoin cycle starts. Thank God the altcoin cycle hasn't started yet. That means there's more time in the bull market. You're going to see things like you're going to see things like Nupal changing. You're going to see runaway weekly chart RSI. You're going to see a massive amount of retail interest, and then you're going to see the blow off top. So I don't think we'll have that hard of a time calling the top. The issue is you could call the top within 20% of it and still, it's just, I'm just not too interested in selling Bitcoin. We're going to sell the alts, most likely. I'm going to dump most of them after they like 10x, and then that will be where a lot of the cash that we hold into the bear market comes in. And after it's obvious that the bear market is starting, I will probably wait until after we've dropped more than 40% off of all-time highs and then start acquiring Bitcoin aggressively at that point in time, not only from cash that we've stored up in the last phase of the bull market, because we're going to try not to buy a bunch of Bitcoin up at the top where I think we're going to get a better deal in the bear market. Right now, I don't know that the bear market's going to go back down here. I'm not actually convinced that bear market bottom won't be higher than where we are right now. That's why I'm still buying relatively aggressively. That being said, I do think the bear market will bring us back below 150, for example. So after we get up to like 150, I'm like, man, I'm pretty sure I can get a better deal on this in 2 years. So we'll probably be holding a lot more cash. And by the way, guys, the way I'm looking at this is the way this is the way the institutions look at it. This is why bear markets end, because it gets to such a point that the smart money realizes I'm going to get a better deal than this in the future. So I'm just going to hold cash and go to cash as the cycle blows off, let the retail be exit liquidity, and then I'm going to hold cash. I'm going to buy in the bear market. That's what I'm doing. That's what pretty much everyone else is going to do as well, except maybe Saylor, because he has a vested interest in just blowing up the market himself. He might be buying the top at 300,000, knowing he's going to be in a massive loss, because if he can push the all-time high higher, then that means the next bull market will be even higher. So he's the notable exception. Don't necessarily follow exactly what Saylor is doing, even though he wants you to do that, because he understands that he is the largest market manipulator in the entire world, and he's trying to play that to the benefit of the Bitcoin price. So don't necessarily follow exactly what he's doing. As far as don't necessarily do exactly what he's doing, do something a little bit different than that, but understand what he is doing. What he is doing is he's trying to get the all-time high as possible, because that makes the calculation of an even higher, parabolically higher, exponentially higher all-time high, next cycle even higher. All right. Bonds predate taxes. If the government had to convince you to give them your money and prove how it would improve society in a way that would return your money, I would feel the world would be a much better place. Yeah, it probably would. I mean, honestly, the world would be a better place if the government spent less money than it brought in, ran a surplus, and then use the surplus to bless people in need. That's how I want you guys to run your lives. I wish our government ran their budget that way. Good day, brother. No more bear market because of institutional demand and countries' Bitcoin reserves. We're officially in super cycle. There is a high possibility of that. If this rally tops out lower than 150, I'm probably going to start calling for a super cycle. I hope that we have a super cycle. I hope so. I hope the 4-year halving cycle is over. I really do. I hope so. So anytime that we see Bitcoin, what I'm saying is that when we call a bear market is if Bitcoin grows by $6 trillion in 3 months, right? If there's the blow off top. Now, Bitcoin has not had a blow off top yet. There's no reason to believe that a bear market is about to start. Now, they can take you off guard, right? But there has not been just this blow off top. It hasn't happened. If you look at the linear chart here, Bitcoin has grown in a straight line, but it hasn't just gone like this, just vertical. It hasn't just gone vertical. It has gone up and to the right. It's taken its time. So, yeah, I don't think that we're set up for a massive bear market. I don't think we're going to be punished with 70% at the moment. Now, if Bitcoin rallies just moonshot to 250 before the end of the year, then yeah, bear market's probably going to happen. The depth of the bear market is proportional to how quickly Bitcoin rallied. And Bitcoin is going through a much more steady, slow and steady wins the race kind of rally this bull market than ever before. So bear market will probably be more shallow, will probably not be as deep. You're sort of contradicting yourself with the whole hyperinflation and Bitcoinization is inevitable. How so? But if dollar had hyperinflation, Bitcoin will, right? It's rated in dollars. Yes, if hyperinflation occurs, then that's going to more or less demand an increase on the Bitcoin price because the dollar that it's denominated in against will be shrinking. You can basically flip the inflation of the United States dollar, add it as subtract it from the gain of Bitcoin and get the growth of Bitcoin in a real sense, basically by tracking the Bitcoin chart as if you were to track it in 2020 dollars. The thing is, Bitcoin is still probably going to outpace the destruction of the fiat currency. But remember, the main reason we buy Bitcoin is to be on the ark. We got to board the boat. The boat is boarding right now. We're going to see a world where fiat currencies are going to implode upon themselves in spectacular fashion, and it's going to destroy a lot of people's lives. A flood of biblical proportions is coming. When we see what we're going to see out of Bitcoin is going to act as an arc that allows us to bridge from where we are now, where the economy is decent, to where the economy is trash. But as the dollar's doing this, Bitcoin's maybe doing this. It's making money, but mostly it's just not being destroyed by the debasement of the United States dollar. So a drop is coming when? I don't know. I think in the next 2 weeks you're going to see a drop. If you're looking for a specific answer, that's what I said a minute ago. There is likely going to be a drop of some caliber, maybe 5 to 12% within the next 2 weeks. I think that's pretty specific. Okay, let's read a little bit of chat and then we're going to wrap it out here. Oh, yeah. Big announcement, by the way, guys. Hey, we have a new affiliate link with Blowfin. If you guys have not already signed up for Blowfin, this is the place to be doing your trading. Blowfin is awesome. And with the link down below, you are now going to get 20% cash back on your trading fees, which is spectacular. 20% cash back. That's awesome. You're going to get cash back on your trading fees. So if you sign up for Blowfin today with our link and our link alone, you're going to be getting 20% cash back. Here's why you ought to do that. Blowfin is the place where whales are made. And that is true. There's been a lot of big trading going on over on Blowfin lately. If you guys want to trade spot, they've got hundreds and hundreds and hundreds of markets, all kinds of markets, right? You've got all the markets over here. You got Bitcoin, USDT. This is a great place with very low fees, and then not even to mention the 20% cash back. You can do your trading from USDC, USDT into Bitcoin. You've also got your futures over here. Got your futures trading over here. If you want to do leverage, you can do it. Please be very careful. There is a lot of leverage available here. It does have this nice little warning, high leverage. Please trade with caution. This is an integrity play that they've got here because obviously leverage trading is profitable for exchanges. It can be very profitable for you if you know what you're doing, but please do be very careful if you're using high leverage. Right now, Bitcoin is going into a symmetrical triangle pattern. That symmetrical triangle pattern could cause us to break out. So if you're trying to make some trades, please be very careful with leverage. I don't necessarily recommend it, but I know a lot of you guys do it anyway, even though I don't recommend it. So if you're going to do it, I would say Blowfin is probably the best place to do that leverage trading. Once again, it's not something I necessarily recommend, but I know my audience and I know you guys are going to do it. If you're going to do it, I want you to do it safely. So do it over here on Blowfin. It is the best exchange in the game for this. So make sure to sign up for Blowfin with the link in the description box down below. Get 20% cash back on your trades. That ends up being a lot of money if you're trading. That's a lot of money. Whole lot of money. They've already got some of the lowest fees in the game. Now you're going to get 20% back. So make sure to sign up with the link in the description box down below and sign up for Luxalgo as well, of course. We'll read a little bit more chat here, then we're going to wrap it out. Tomorrow's headlines will be Bitcoin crashes to 109,000. Yeah, I mean, that would be really funny. It's kind of what we're looking at. Jeb, assuming Bitcoin tops 130, 150, 175, 200, what are the most likely bear market lows at those possible peaks? My assumption with institutional investment retraces to be more like a 50 to 60% drawdown. That's what I think as well. So that's a great question. I've analyzed this before. I'll show you again. If you look at the BLX, here, you can see the drawdowns on bear markets have gotten statistically smaller, right? The first major bear market, 2014-15, Bitcoin had a drawdown at the bottom of 86%. In a real sense, it was about 83%. The next bear market here in 2018, I was present for this one. Bitcoin dropped 83%. So it went from about 85 to 83%. The next bear market here in 2022 and 2023, we only dropped 77%. If it weren't for the collapse of FTX, we probably would have bottomed here at 73%. So we would probably see a bear market drop of 60%, again, because of institutional investment. That's the big one there, is because you're going to have mandated by law investment into the United States, Strategic Bitcoin Reserve. You're going to have continued buying from the likes of MicroStrategy and a lot of other people that have just become more confident in where Bitcoin is going in the long-term future, like myself, that'll be buying even more in this bear market, if it happens, than we were in the last bear market, just because Bitcoin's proven itself more. And so with that extra proven track record, it becomes more likely that you're looking at a 50 to 60% correction. Well, if you rally to $200,000, then a 50% correction is back down to $100,000. A 60% correction off of 200 would be back down to $80,000, right? But if you end up going to, let's say, 250, a 50% correction is down to 123. A 60% correction is down to 98. So basically, the levels that we're at right now are looking like they could be some of the lows in the bear market. Let's say conservatively, Bitcoin goes to 175. I think it'll go to at least there. If Bitcoin goes to 175, a 50% drop is down to 85,000. A 60% drop is down to 70,000. 70,000 is lower than 111, but 111 is still over half of the way through the bear market, right? 175, if we go to 175, which is a low all-time high, if we go to 175, 111 is still 30%, 36% off of 175. So that's why we've been so aggressive here, because I think even if we do see these levels in the bear market, we're probably not going to see them for more than 6 months. You know, it's good to be taking advantage of these opportunities, because in the long-term future, $111,000 Bitcoin is going to be nothing compared to $1 million, $2 million, $5 million, $10 million, like we'll see in the next 10 to 30 years. So yeah, that's my take on that. Good question. I'm looking at 60 to 65% absolute max for this bear market as a result of how much more mature the space is than it was. All right, I hope you guys have enjoyed today's stream. Make sure to hit that like button, subscribe to the channel if you have not already. Also, make sure to sign up for Blowfin to get that 20% cash back. Sign up for Lux Algo, get 20% off at checkout. Use our referral link. Use the link down there. You'll get 20% off at checkout on Lux Algo. Helps to support our channel. You get a great indicator along the way. Appreciate all of you guys. And before I go, I do just first want to thank each and every single last one of you for watching. As always, I love you guys. And I will see you guys in the next video. Peace.
Oh, I got a real good feeling.